Ever catch yourself thinking, I wish I had a checklist of do's and don'ts to wrap up my corporate tax return and keep CRA off my back? Well, guess what? I have a checklist that does both these things. And today's your lucky day because that's exactly what I'm diving into. Hey, how are you? I'm Duncan McPherson and welcome back to my channel. Today is the first in my two-part video series where I'll walk you through the checklist of do's and don'ts in the preparing of your corporate tax return. In order to, number one, keep your tax filing clean. Number two, keep your records tight. And number three, keep the CRA off your ass. This video will focus on your income statement and the next video will focus on your balance sheet. And as always, if you are a US business trying to survive in the Canadian tax jungle, click on that subscribe button and hit the notification bell. Or skip the hassles and reach out to me directly through themactax.com for more tailored advice. Now, a big takeaway for you today is that the advice in these two videos is relevant to you year-round, not just when you're filing the tax returns. I promise you'll understand where I'm going with this by the end. So let's get to work. Step number one, review your tax filings from last year. Go get number one, your 2023 T2. Number two, your 2023 payroll summary. And number three, your 2023 GST filings. You must get these things and review them for the recurring issues like, and I apologize, but I'm going to have to read this off a list. Number one, your book to tax adjustments. Number two, your interest expense limitations. Number three, your financing fees. Number four, your stock-based compensation. Number five, your intercompany charges. Number six, any transactions that create notional interest expense like capital leases. Number seven, any other large income or expense items. So look for these items and be sure to deal with them this year too. If it was a headache last year, it'll be a migraine this year if you don't start dealing with it, because you may already be on the CRA radar. CRA does not always jump on something in the year that they notice it. So if you have unresolved issues from last year, resolve them now. If you don't, you're just gift wrapping to CRA. Don't let the problem grow. And call me if you need to. Now let's move on to the next step, which is actually the no-brainer of the list. Step number two, your source documents. Sure, this one may seem obvious to you, but it's worth mentioning. Make sure you have organized and have easy access to, number one, your invoices. Number two, your payroll. Number three, your canceled checks. Number four, bank transfers. Number five, anything that backs up the income statement. I know you already have got this covered, but the reason I mention it is, a lot of the time, this is the only thing on my lists that companies actually have covered. The rest of my list tends to get ignored. And when CRA goes sniffing around you for the stuff in this video, and if you haven't looked after it, well, that's when shit happens. So listen up, because these next few steps will bulletproof your income statement and ergo your corporate tax return, your T2. The next steps, number three and four, are million-dollar advice. Because I'm telling you, not even the national firms will advise you on this. I am uncertain if the national firms don't know this stuff, or if it's because it would cut into their fees if you did know this stuff. Your guess is as good as mine. But here we go. Step number three. Build your income statement legal file. Pull all the legal work together that connects to your income statement. I mean, your intercompany agreements, your independent contractor agreements, your employment agreements, your lease agreements, your loan agreements, especially when it comes to non-bank financing, your customer and supplier contracts, and your stock option plans. Any legal work that ties to a number on your income statement, get it now. Usually your company stores these records all over the place. Take the MacTax approach and make copies of all of these, and you keep all of the copies stored away in your audit file. Now that you have all the legal work, it's time to move on to step number four. Step number four, tie it all together. You're going to want to reconcile that legal file to your income statement, your payroll records, and your GST filings. Step number three and step number four is what saves your skin when CRA comes knocking. Most business owners have made the tacit conclusion that all their legal work already ties to the income statement. It's human nature for you to do this, but I am telling you, until you put somebody on this task and take a look at it, it's probably not agreeing. And this is where your CRA audit problems will begin. But let's keep moving because there's more ground for us to cover today. The next steps I call your compliance checks. Think of these as the chain that binds your books and records to your corporate tax return. Step number five, review tax law changes. Now, mind you, tax laws shift all the time. If you don't know what's changed, call the MacTax. Enough said. Now let's move on to step number six, confirm deductions. You know the ones I mean, not the deductions backed by your invoices. I mean the deductions that exist between the twilight zone and reality, your gray area deductions. Your deductions based on CRA policy, not law. your deductions that involve estimates and judgment, your deductions that involve a little bit of guesswork because the info wasn't available by June 30th. If you got deductions like these, and most of us do, you should keep a log of them. In fact, you must keep a log of them. And you should document how you dealt with them. If CRA does not like what you did, they will respect you merely for having kept the log. It shows you didn't just make it up. And ergo, CRA is likely not to make a big deal about it for you. Also, by merely logging these twilight deductions, you are more likely to develop better ways to deal with these expenses in the future. But please don't just fucking ignore this shit and hope that CRA doesn't notice it. Because in your near future, with the advent of AI, CRA is very likely to pick out the twilight deductions from your tax filings. Okay, now let's get back to reality and the next step. Step number 7, claim your credits. Don't leave your hard-earned money on the table because you may be entitled to number 1, R&D credits. Number 2, accelerated depreciation. Number 3, green incentives. Number 4, industry-specific programs. So make sure you've got everything you're eligible for. Losing credits is tantamount to burning your own cash. Okay, now let's take a breath and let's move on to something a little less complicated. Step number 8, verify your deadlines. Not just your T2 filing. I mean your quarterly filings, your installments, everything. Track your deadlines. Keep a list of your deadlines and your duties and get your work done ahead of the deadline. Because here's the deal. Miss your T2 deadline 2 years in a row and the penalty doubles, even if you didn't owe tax in the first year. Got it? Okay, good. Now to the final step. Step number 8, use professional help. This one's not optional, my friend. Hire an accountant. If you haven't brought in a pro yet, do it now. The longer you wait, the messier it gets. Now keep in mind, everything I have said to this point can be done with bookkeepers, not expensive professionals. But now is the time for the pros. If you've done steps 1 to 7, this step shouldn't even be that expensive. Book a pre-filing review with your accountant. Ideally do this 3 to 4 weeks before the deadline. If you wait until 2 weeks before, your accountant's going to be too busy and too distracted. And let's be honest, that's not good for you. But hey, that's it for today, my friend. In my next video, I have prepared a checklist to protect your balance sheet from CRA backdooring their way into your income statement. Yes, I know this is uncommon for now, but not for long. And like I mentioned earlier, June 30th is just around the corner. And if you now just realize that you might need to talk to me, just head to themactax.com and give me a call from the number listed on that site. You'll talk to me directly and we'll get you sorted out before the deadline. And of course, hit the subscribe button for more tax-saving tips. Until next time, stay sharp, stay compliant, and stay out of tax trouble. And I'll see you on the next video.